Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Lee Kearney. Thanks for being on the show, Lee.
Thanks for having me.
Now, I'm honored to have Lee on the show, but a little bit before I tell you about him, I want to remind you to go to Life Bridge Capital, go to the Contact Us page where you can connect with me personally, and I'll get on the phone with you and help you any way I can. Go to the Real Estate Show Facebook group where you can leave questions for me to ask guests and experts like Lee and get your questions answered on the show. So go there and get active in the group. But back to Lee, he is one of the nation's most successful single-family real estate investors. Since 2004, he has bought and sold, are you ready? 7,000 plus properties and is known as the expert in leveraging real estate market cycles. He now owns several real estate businesses in Florida, all operating under the Southeast Property Investment Network, also known as SPIN, to fix and flip properties across the U.S. So, Lee, thank you again for your time and being on the show. I mean, you're obviously an expert in this space. I mean, you've just mastered the systems and the business to be able to do this very well and very efficiently. And I look forward to getting into this because that applies to, it doesn't matter if you're multifamily or single family. All of us are trying to build these systems where we can be the most efficient and obviously buy as many properties and do all this as fast as we can, but be as efficient as well. And you've mastered that. So tell the listeners a little more about, who you are and let's jump into how you've built this business.
Sure. Well, I started by accident in 2003. I was living in Ireland at the time. I bought a condo, got broken into. It was a penthouse, moved out. No one wants to live in a place after they get broken into. And thank goodness I was able to move back in with my parents at the time, put the property in the market and sold it, made a 35,000 euro profit approximately. And what struck me about that is I made more money on that deal than the job I was working at the time. And that's when the light bulb went off for me. So I decided when I moved to California in 2004, I was finishing my master's at the time. I found a coach, someone who had gone to church with, who was able to drive me around, look at properties. And as I followed him around and watched what he did, I asked lots of questions, helped him cart materials from Home Depot, just whatever I could do to assist. What I realized was I just needed to buy in this area, at this price point, put this amount of money into it and sell at this price. And I said, okay, I can do that. So I had the information in hand, was guns blazing, went out into the market, super hard market in San Bernardino. It took me 4 months to find my first deal. So I guess for anybody out there, if you think that you're striking out in day one or day two, I did this for 4 months to find my first intentional flip. Finally took it down through an agent, a probate deal on the market, was able to buy it with hard money. So I borrowed that. I had some cash of my own, which I used for the renovations. So hobbled the property together, somehow even doing exactly what I was told to do, putting out the signs and waiting for all the buyers to come. About 50 people came, made 35,000. The deal sits right outside my office, which is a reminder to me every day of where I started, and decided to repeat the process. So I did my second property, made my first and second mistake on that second property. I'd moved back to Florida, so I tried to remotely rehab it, and I had a friend do the rehab. Complete disaster on both fronts. Somehow stumbled through that rehab, got out the back door because California was actually starting to slide at the end of 2004. So I think by the middle of 2015, when I finally sold it, made it 10, 12 grand, but it wasn't a loss. So I was delighted to get out of that house. Decided to learn about foreclosures. So I asked everybody I knew, do you know about foreclosures? I heard that that's where you get deals. Didn't really know what a foreclosure was, which is funny to me now that was only 14 years ago that I'm asking the questions that I'm telling you about. And I guess my point for everybody out there is no dumb question when you don't know. So found a friend's father who was buying at the courthouse steps. And I asked questions like, what is the courthouse steps? What is a foreclosure? Why are numbers being auctioned? They were case numbers. The case number represented a house. Found a person selling a book that turned the numbers into addresses. And the rest is really history there because I bought my first and second and third, and I used everything from bootstrapping credit card debt to instant line of credit from Bank of America as soon as I got title. And I was able to grow a multi-million-dollar portfolio in about 18 months. Then along came 2007. I got off my honeymoon with my wife at the time, and I said, said, we're done. We're broke. The market had turned. I was still buying and selling and rehabbing into a downward market, which you couldn't have told me this back then. I just didn't know what I didn't know. And I didn't have a mentor. So I guess if I had a mentor, I probably could have got pulled out of the fire. But the reality was I would have needed to been pulled out of that fire a year and a half previous to when I actually crashed. So I had all these rentals that were over leveraged, not cash flowing, rehabs I was selling at a loss, had up having to stop pay on all of my debt and renegotiate everything, short sales, write off uncollateralized debt. It was terrible. So most of 2008, I was cleaning up my credit and through 2009, but I had to make money. So what I realized is two important lessons, and I'm sharing this with everybody because I lived these firsthand. And so a lot of people now are in real estate as we're doing this show. They've been experiencing an upward market, extremely low rates, and everyone thinks they're amazing. They're buying deals, and I just closed on 100 doors and 200 doors and 500 doors, and I'm amazing. But the reality is there's a lot of things operating in people's favor today. And that has not always been the case. So 2008, I realized two things. One, there's always money in real estate. Two, you got to be on the right side of the trade. So I immediately flipped from being a rehabber to being a wholesaler. That completely took the market risk off of me, put it on my buyers who actually were getting good deals at the time. I was making $5-10 grand assignment fees. And as I was digging my way out of the hole from 2006 and 2007, I made about $1 million my first year wholesaling. So the rest is history after that. The opportunity was wholesaling, a little bit of rehab, transitioned into a lot of rehab, sold a lot of turnkey properties to overseas buyers. And then several thousand deals later, here I am today with a mature company. I've got systems and processes. I've got people in some cases that have worked with me now for 10 years. So it's a well-oiled machine. We put a widget one end and it comes out the other, and we make profit, and it's pretty straightforward. So I like single family because I understand it. I bought and sold multifamily, but right now I look across the board, and the only thing that attracts me today is the cheap long-term debt. Everything else scares me to death because I see prices, I see assets trading for 2 and 3 and 4 times what I saw them for back in 2008. That's why everyone has to look through this for their own lens. My lens is that I made and lost $2 million in 2 years, 12 years ago, and I just don't want to do that again. So I would say I'm probably more risk adverse than the investor coming into the market in the last couple of years. But there is always money in real estate. Like I said, I made that statement a few minutes ago. And the good news is I think with multifamily that's cash flowing or single family it's cash flowing, and I have lots of students out here who can attest to this, they rode the market out even though their balance sheet was upside down because they had positive cash flow. So what I would say to everybody out there, don't go into deals where you're stretching your debt coverage service ratio and you're just barely able to make your payments, because the reality is if you have one house and one thing goes wrong, if you own 100 doors, that's 100x the capex you got to spend on that property or repairs and maintenance. So you need to have those reserves and make sure that you're able to pay your bills and operate these buildings effectively. I do think there's going to be a wave because of the cheap debt. Again, it's just like people buying cars. The car's $300 a month. They're not looking at what the sticker price is. And my big fear for a lot of new investors, they're not looking at the sticker price. They're looking at the arbitrage and cash flow. And they think it's, let's take multifamily. You take a lot of people after their takeout debt, 80%, they may be cash flowing $100 a door. I've owned property for over a decade. $100 a door is extremely tight. And you times that 100, if you've got 100 units, that's a very, very thin line that people are riding. Then on top of that, if you take the people that are buying at retail deals, which is where the problem starts, whether it's single family or multifamily, if you're not buying at wholesale, you have no cushion. Now think about this. If you're getting your first stack at 80% and you're paying retail, you're bringing in equity partners at 20%, you're 100% leveraged on that deal. And that to me just is a very scary proposition. And that's why I encourage everybody. It doesn't matter if it's single family or multifamily, always buy at wholesale. And really, I would say 70% is your max. 60-65% is great because that means you can cash out at 80%. You can have a reserve of cash which you should not spend, by the way. You should keep that for a rainy day. Also, it'll boost your balance sheet. And that way, then if you do come across a big repairs, or you've got big vacancies or a big problem in any of your units, you have reserves there to cover it. But I just see a lot of the same mistakes coming back. They're just coming back in a different form this time. And so I'm interested to see where all this is going to be a year from now, 2 years from now, and 3 years from now. And I would say that every market's different, but Florida for sure, we're already sliding the other direction. And single family in South Florida, I've seen a slowdown. I've seen the comps at a high point in 17 and coming through 18. They've been starting to decline in 19. They're doing the same, following the same trend. So every market is different, but these cyclical markets like Florida and California, Arizona, Nevada, you got problems. There's definitely problems on the horizon, and it's a time to be cautious and look at the market risk and not just the pure numbers.
Are most of those 7,000 unit or properties in Florida?
Majority of them were, yes. About probably actually about 6,000. But the last couple of years, we've diversified and gone nationwide. So okay. Yes, the majority of those properties have been in Florida.
I just thought, that many units, that many turnovers in that amount of time, you must have just a massive amount of data that's so valuable as well. Being able to understand and see some of these things that's happened over the last decade.
In real time, we see it. We pulled out at a lot of markets in Texas. We're competing against new build that are selling less than building costs because builders are just trying to dump their assets. It's crazy. So we'd buy a used asset, and even if it was 2 or 3 years old, we couldn't compete with brand new construction. So, I see this stuff in real time, and this is where my data is good because it's real data in real time and not the news, which typically is trailing 6 months to a year behind. When you see on the news that there's a housing crisis, that housing crisis probably happened a year previous.
Yeah. Yeah. And I appreciate how you say, like, there's always money to be made in real estate. And one of the things you're very educated about is just understanding the real estate market cycles and how to find opportunities, in every cycle. But I'd love for you to elaborate a little bit on, just understanding that market cycle and how you are doing that. And so you're prepared. You mentioned you already see it happening in Florida. So what are you doing to prepare for that?
Well, what I would say is whether you're buying single family or multifamily, make sure that you got good cash flow. Make sure that you're trying to kill these deals. And what I mean by that is you're going overboard in your renovation costs. You're going overboard in your vacancies. You're undercalculating your rent. Where people run into issues, I see a lot of people forcing appreciation, whether it's single family or multifamily, and the rents are 500 and they're projecting 750. Now, if 750 doesn't come, they're pretty much square out of business. And so that's where I think there's a lot of issues. I mean, let's just take a single family renovation. The best way for us to underwrite today is we've got a low comp and a high comp. We take the lowest comp and the highest renovation bid. That right there is a natural cushion that I build in to make sure that even if the market's starting to turn, the good news is it's not like the stock market where it crashes in one day and you got Black Friday in the real estate market. It typically moves over quarters and gives you plenty of signs that there's something changing here. Multifamily is interesting to me because the rates are just so darn cheap that you're able to cash flow on these low cap rate buildings. But experience has taught me that units are not always going to be occupied. When people start losing their jobs and they can't pay their bills, rent is one of those bills that they can't pay. Evictions go up and cars get repossessed, and it's not just real estate that crashes. It's anything that people have to spend money on that's a bill, they stop paying them. So that's a natural part of the debt cycle. That couple that with real estate being typically, we're pretty much inflated across most asset classes. There really is no free lunch. And so when you ever hear someone say, "Oh, I'm going to storage," it's like this undiscovered territory. I mean, the magic hand of capitalism finds any opportunity in any market and typically closes that gap. So assets are priced accordingly, whether it's an A or B or C or a D, it's priced according to the risk associated with it. You got the substitution principle kicking in. And so with that, all of that being said, I don't believe that there's some undiscovered free lunch in real estate that's some magical guru is going to show you that no one else has discovered.
I couldn't agree more. But I like how you mentioned too, you're diversifying, right? I mean, you are looking into other markets, you're moving into other markets. Can you give us an example of a market that you chose and why? Like help us to understand, how are you, how strategic are you in like picking other markets that you're going to?
We're trying to just day trade, and honestly, our philosophy is going to be different probably in the answer you're looking for. We're not chasing markets, we're chasing mispriced assets. And so what I'm looking for is assets that were mispriced by a seller through an auction platform or any platform where if I bid on enough assets using my formula where they fit my buy box as far as the type of asset I want to buy, I look for the ones that are mispriced. And there's a real beauty when you don't have an area and you're just buying stuff that's a deal, you can pick up a lot of stuff that your competitors are not chasing.
That's interesting. No, that's very interesting and how we could apply that. And I'd love to hear more too about how, just scaling this business, quickly you scaled, and obviously I know the 2008, wiped you out, but like, you've been able to build systems and come back, in a very big way. And I'd love to know just some of the crucial systems that you had to put in place to really scale this to the level that you have.
Sure. At some point you reach an economy of scale where you can have specialists within your organization. So now as a scaled organization, I've got a pre-acquisitions team, acquisitions, I've got a transaction coordinator in the buy side, I've got a sales team, I've got a dispo team, I've got a construction team, I've got a field services team, I've got a transactions coordinator when I sell it. And I got an accounting team. And what's nice is when you reach a certain economy of scale, single family or multifamily, you can have specialists. I've always viewed single family, especially, or really real estate as a production line. You're just trying to get it through in one end and out the other. Even if you're going to rent it, the end of the line is getting the property rented and stable with a stabilized tenant. Now that asset's done and it's stable. So it really applies whether you're buying or selling or you're renting. I look at where I want to end up with this asset, and I look at all the steps and the events that need to happen to get it there. I try to put experts in place in my business to handle each part of that process.
I like that. And it goes back to the system, right? I mean, you've created this or the model, and okay, this is the asset that we have. This is where it fits in the model. Who's the specialist that you have over that? I mean, that's going to take it from that one to the next specialist.
Yeah, they do hundreds of these. At this point, I've got people in my company who've done thousands of the same thing. They're really good at it. And so we just create SOPs. I try to dumb them down to a third grade language. So if that person leaves and the next person comes along, it's straightforward enough. So I just try to take the people out of it and make the system dummy proof. And that's really what I would say to a lot of business owners out there. If you're listening to this, these complicated softwares and complicated systems that only you understand and you feel very smart because you hold the keys to the kingdom in your business, your goal should be to work yourself out of the business. That should be your goal. And so if you take that view, you make everything really stupid so anybody can do it. And if person A leaves, you just put in person B, you cross-train your team, and you want to make it easy, and you want to make yourself where you're not needed in your business. You basically want to kick yourself out of the door. And that's really the goal of how you have a business instead of being a glorified employee.
Is there any tech that you've used to help you develop your SOPs, so it's easier to share, easier for people to go through and understand?
Sure. We built our particular inventory management system on a Deltek platform, Vision. That's what I did. And all I did was look at what's the primary driver. In single family, it was the sales status. The same thing with my rentals. So basically I moved each asset through a different sales status, and that's what moved it through the system. Now, when it comes down to single family rentals, I've just used the off the shelf AppFolio is what we've used. I think it's a fantastic software. I remember trying out Yardi. For people who hate their life, you should use Yardi. It's the absolute Yardi. If you're listening to this, you have the worst property management software and customer care in the entire world. But AppFolio we settle on. It has its problems like everything else, but we found it to be great software. And what I really liked about AppFolio is that it managed your inventory management, your marketing, your rent collection, and your accounting. So it's all in one place. And that to me was exciting because we eliminated double accounting, double entry back into QuickBooks, and all the things you don't want to do. And I found that to be just a great all-around software. But everyone's got their preference. If you ask 10 different people, but I listen to high-level operators. And so when I had a terrible experience with Yardi, I asked all my friends, and the name AppFolio just kept coming up, and that's the one that we finally settled on. But it comes down to just viewing the events in your business and understanding the life cycle. I mean, you take a rental. I mean, it's very, very simple. If it's not rehabbed yet, it's in that rehab phase. If it's then rehabbed, it's in the marketing phase, whether it's for selling it or renting it. Then if you've got a tenant placed but not yet moved in, it's sitting in that status. As soon as the tenant moves in and it's paid, it's stabilized. And so it's just the circle of life, whether it's a rental or property that you're flipping. Property you're flipping, it's you haven't bought it yet, you closed on it. If you either put it straight to sell it, if you're going to wholesale it, or you put it into construction, it comes out of construction back into marketing, goes from marketing to a pending status, it gets sold, it's out the door. People overcomplicate real estate, but you've just got to look at what that life cycle of a property or whatever you're doing in real estate is. And it's the same way with loan. If you're lending money, the capital is sitting there unused, the capital is placed for a project, the capital is put out, the capital comes back, you recycle again. It's the life cycle of capital. And so that principle really applies to every aspect of real estate.
Can you give me just a couple tips on how you are like you motivate or encourage employees, to work and to be driven in this business?
Sure. You have to be what you want them to be. And so if you don't want them to be lazy, don't be lazy. It's very, very hard if you're not passionate about your business, but you're expecting your team to be. I think that there's a real disconnect there. If you don't love what you do, they're probably going to come to work with their chin dragging off the floor too, because everybody hates their life. I try to lead by example, come in with a positive aspect, check my attitude at the door, and be the kind of leader that I want my team to be. And I have a huge effect. And any business owners out there, if you're listening to this, the way you come into your office and portray yourself is exactly what your employees are going to mirror. The team is going to mirror exactly the way you act. And what you'll find, even if you got one person who's not feeling quite up to par, they're going to be motivated by you and say, you know what, I'm not feeling the greatest, but now I've come to work, I feel a whole lot better. And what happens is I want happy team. A happy team is productive. An unhappy team makes mistakes, is sloppy, is just not doing a good job, a quality job. And I want a team that's likes coming to work. And I've told everyone that works there, if it gets to a point you just don't like working here, I'm okay with you leaving, because I'd rather have people that want to work here instead of people that don't.
Awesome. And so just a few last questions before we run out of time. Lee, what's a recent improvement that you've made in your business that we could all apply to ours?
Sure, absolutely. I've got a great one for everybody out there. In our real estate education business, and I'm considering making the switch in my real estate investment business too, is switching over to Monday.com. So Monday.com is like a Google Sheet, which I've used for years on steroids, with a lot of cool buttons, a lot of integration between being able to just drag your email right into your task, and your task is your email. So you're emailing out and your task is getting updated all at once. The color coding's easy. It's third grade stuff where it's easy to understand. You can bring different people into different projects, and it's just in a format that to me is visually appealing, and it's easy for your team to understand.
Yeah, I haven't heard anybody talk about Monday.com. I see the advertisements everywhere, but what were you using before? Was it Google Sheets or?
Yeah.
Okay.
It's basically like Google Sheets on steroids. That's the best way I could describe it, because anyone who's used a Google Sheet will latch on to what I'm talking about here. I like the collaborative features. I like that you can bring certain teams and certain projects and keep everybody. So everybody basically has their own menu. So if you're involved in project A, but not project B, you only see project A. And so it's just nice. I'm always looking for that tool that's easy to use as well as being effective. And I've found that to be a good hybrid between a hard to use software. Like for me, I look at something like Podio and I think it's real clunky. I just can't stand Podio, but that's just my personal preference. I always liked Google Sheets because I'd either create the workflow left to right or top to bottom, super easy. If I had a certain workflow, I'd start here, just work your way down. And then as soon as you're done with the list, you're done. And I like the fact of something being simple like that. But yeah, Monday.com has been a good tool for me. I've found that being effective in running that business, I'm able to work with my assistant and have a lot of the tasks be plug and play without me having to actually push the buttons.
Nice. And what's the number one thing that's contributed to your success? And I would go back to, like, I mean, you experienced the massive, downturn and, hard times, right? And now you've come back. What's one thing that's contributed to that success and comeback?
Sure. It's a market-driven approach. Instead of locking in a strategy and beating that strategy to death, whether it's in line with the market or not, I look at the market, I see what the opportunity is, and then I tailor a strategy around where the opportunity is, instead of just trying to fit my strategy into a market. You're never going to beat the real estate market. It's a multi-trillion-dollar market. It's going to crush you. It's like an ocean. You're not going to stand and hold back the tide. It's the same thing with real estate. So you have to be humble enough to be able to pivot your business and go where the opportunity is.
Great advice. Great advice. And so, how do you like to give back?
How do I like to give back? We support Redefining Refuge, which is a charity I've supported for many years. They actually house trafficked women, and they rehabilitate them, they educate them, they get them back into society with a job, able to stand on their own 2 feet. They get them away from their, owners, for lack of a better word. And so that's a cause I'm really, really passionate about. And as a Christian, I do a lot of good deeds where I don't tell anybody. I'm not a big fan of bragging on social media about doing that. I think it's good to just do that stuff and not tell anybody. But, that's on a personal level for me. But as a business, the one that we support is Redefining Refuge. I personally know that the founder of that particular nonprofit, and it's a fantastic organization.
Awesome. I appreciate you sharing that, Lee. I'm
Sure.
grateful for that. It's a great cause, no doubt about it. And but great show. I appreciate you just elaborating on your experience and going through the downturn as well, and how you came back, and systems that you've used, and employees, and there's all kinds of great tips that you've provided, Lee. But most importantly, right now, tell the listeners how they can learn more about you and get in touch with you.
Sure. It's very simple. My brand is realmogul.com, www.realmogul.com. You can go there. You can find out about me, how I educate people in the marketplace, and I'd be happy to discuss that with anybody. But that's where you can go if you want to learn from me and about me. That's where you go.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.